Hi guys, and good morning. It is a Sunday, the 7th of January 2024, 10:16 a.m. London time. So, a warm welcome to the new year to everyone tuning in right now. I am happy that you are joining me once again to hear some thoughts about the general market. Just want to send some love out to you all and say to you that I hope you had a good previous year and that you didn't spend the festive season alone. For those that did spend the festive season alone, I hope that it gets better next year, or that you enjoyed yourself. Yeah, so just sending out some good energy there. Today I have a video for you following on from the previous videos that intends to give you a map for Q1, right? That's really the idea of this video. We're going to look at the contextual climate carrying on from all the work we've done previously. So if this is the first video that you've seen in the series, then perhaps try and go back to the last video or the one before to understand how we reach certain conclusions. But I will backpedal anyway. Before I begin, it's my intention to present what I do see, not what I want to see, and also to present what I see clearly so that it can help you make decisions or factor in information or challenge your own viewpoint should that be required. So let's begin. So firstly, we're going to start with BTC, right? And the main question that you guys want to answer, especially here, is do we expect a rejection? Number one. Number two, if we expect a rejection, how long would that rejection take, or how quickly do we think it will manifest? Number three, how do we view this going into the ETF, right? Is this a problem? Is this not a problem? What do we do with our positions? Should we stay out? Should we stay in, etc.? I'm gonna try and answer all of them as clearly as possible. So the first thing that I want to highlight, let's answer question one. Right, the first thing I want to highlight to you is that we've put in a significant amount in this trend since the 7th of November, and we've barely stopped. Okay, we did here, but it was a consolidation to take us higher. The consistent ripping has taken us into the yearly open. Not only are we hanging around by the yearly open, but we are forming a swing failure around the yearly open. Right, this is the range that we've concluded through a long methodology in the last video and said, okay, this is the range we're looking at, and I went back through history and said to you, look, basically every time we've touched the yearly open, we've had a significant rejection, right? Significant rejection. I do not suspect, right, especially because we've formed an SFP here, or trying to, I do not suspect it will be different this time. All right, I think simplicity is the friend here. So, my first angle in looking at this is I remain bearish, and I have remained bearish within this entire range when presenting contextual factors to you, which I'll talk about in a moment. The second thing that I want to point out is that we are consolidating within this range here, right? So we've swiped this range high, and we have a range low that is forming here at the 40,000 region. So that is the current range that we're dealing with. When in previous ranges at the yearly open, sometimes it's taken a long time for the trend to flesh out. Okay, so here, for example, it took quite a while, right? It took almost 2 months for the trend to flesh out. Here, again, it took, again, a month and a half for the trend to flesh out. Again here, right, there was an initial large snapback where we didn't quite hit the open, by the way, and that's going to be a significant point. But then, the consolidation range lasted a while and then proceeded upwards. And, the same has been like that throughout history, right? So I just wanted to highlight that for you, that just because we've tapped the yearly open doesn't mean we specifically need to dump quickly. Doesn't mean that, right? That leads me to the next question. However, we have a very important event around us. and that's the ETF, and it's expected any time in the next 3 days for a decision to come out. I do not see any reality right now where that is a midterm or short-term bullish announcement, okay? If the ETF is not released and it's not approved, then people are going to panic, right? Maybe you get some short-term volatility, but it's not positive. Definitely not. I think that is very, very obvious. There might be some games played in the order book around that time, but definitely not bullish. However, if it does get approved, well, number one, a lot of it's priced in. And number two, it's not favorable of my knowledge to view the current news as something that is positive. What do I mean? If you scroll through Twitter, all the news outlets are saying, oh, you know, this is when the ETF is going to be approved, or BlackRock are expecting this, or, you know, this person is expecting it to be approved. There's a lot of certainty from news outlets that the ETF is going to be approved. What have I said to you time and time again about news outlets? We must invert them. So the news outlets have put out a flurry of bullish news. A flurry of bullish news. Yeah? Consistently. Talking about the ETF like a certainty. When we have a swing failure at the yearly open, and if I am to, you know, just take a quick diversion, I was on YouTube today, and influencers that are not crypto influencers were talking about how much money they have made from crypto. Okay, this is not a bullish environment at all. It's not a bullish environment, right? I will stand behind that as a, you know, heavily weighed bias. For me, of course, we can go higher, and I'll discuss that now. But yeah, I don't see this as a positive event. And the traders or investors that I respect are saying precisely the same thing, right? Doesn't matter if I want it to go up or not, which is what I want actually here, surprisingly, but I don't think it's possible. Now, if we go into the short-term view, you know, we've had this giant raid here, yeah? One second. We have a giant raid that's come in here. So we've raided this range low, okay, here. It's an intermediate range low, and we formed an intermediate range high. So we have this current range also. So we have a few different key points to view, right? So we have this that's complete, and this is how you need to look at liquidity, right? If you know anything about the ping-ponging of liquidity, this is how you do it. So we have 3 key levels. One has been taken, so we have 2 to decide on, basically, right? This is the defining range, in my opinion, for this climate. Right, this here is the defining 3 key level. 3 key levels are the 3 key levels. Now, this was very suspect, the way this happened. So I was meditating in the forest at the time, or in the mountains. Now, how this occurred was extremely suspect to me, because we're talking about fake news being leaked, or, you know, what it seemed to be like something very coordinated to cause a dump just after taking this high. Because that has happened right before the potential ETF, I suspect, yeah, that we're going to triple rate this, right? I suspect something like this is going to happen, and then we are going to dump, right? I highly suspect. However, we could just dump from here. So we could just consolidate, right? And it would look like, for example, we're going higher, and we form a base, and then we just puke below that base. I think that is what's going to materialize if the ETF is, you know, not approved. You have to look at this from a leverage point of view and a spectator point of view. You know, if the ETF fails, there will be a flurry of short interest that I think will have a counterparty to that to wipe them out. Alternatively, I think there's a flurry of short interest here anyway, because, you know, this just screams manipulation to me. So I would favor a move like this, and then a move lower. How much lower? Can't tell you. I would say between 20 and 40%, right? So we're looking, 20% would be 36, and 40% would be sub 30. Due to the competitiveness or the idea that the books will be full and that we have more liquidity this cycle in the markets in general, I would suspect that we wouldn't make it past 32,000, which was my key level. And sorry, the comment about liquidity isn't 100% correct. I meant to say maturity there. So this is what I believe is going to happen. And then from there, we have to reevaluate, right? Could be right, could be wrong. But so far, we've been bang on, or I've been bang on. So I'm suspecting I am here too. Now, how does that affect altcoins, right? How does that affect altcoins? And if, by the way, I'm wrong, before we move on, what will happen is this will range slightly going into the announcement, and then we'll have a massive move, depending on how much short interest there is. So I only see really two manifestations here. You know, we either do this that I discussed previously, or get to this 54,000 region before dumping, right? Okay. Before I move on to altcoins and talking about other contextual factors, I want to remind you that if we are to follow the consistency of pre-halving gains over time, what would happen is the trend would move to this area, right? 57,000. So as previously discussed, there is a descending pre-halving pump that occurs, right? So we have 460, 405, 343. The next is around 274 in the series. You know, there's give or take a few percent, but yeah. So the expectation for me was that, of course, if that level gets hit early, then that's a major take profit signal. But it's, you know, with the price doing what it's doing now, I don't think we will hit that area. I think that may come later. So what I am suspecting is that this is a take profit area for most people. We get a bearish kind of Q1, and then just before the halving, we start to rally quite aggressively. And what we're looking for, if that's the case, okay, always use this as a model for how to think, not a model for exactly believing what I say is going to happen, which I know is difficult because I've been very accurate over time. But here I'm really sharing with you models of thought, yeah, models of thought, models of deconstruction. Because essentially, you know, the market's in flux. We have to be flexible with the way that we plan, and you know, there is no certainty. So if you say, well, oh, it could go up or down, well, that's the whole point, right? It's the ability to plug into the signs as they emerge that gives you the profit. It's not having certainty, because there is never any certainty. So just want to put that disclaimer out for those. I know there's not many of you, but maybe there's probably one or two thinking, oh, well, give me an exact scenario. Well, markets don't work like that, right? And if you don't know that, you haven't reached maturity at this level yet. So, little mini rant over. This is what I expect, and I expect that because if you remember the last video, I don't know if I've still got the chart up here. Let's see if I have. It's not here. And could it be on Coinbase? Could it be on Bitfinex? It is. So ignore these percentage markers. I basically said to you that the presiding trend, after January open, is often reversed, followed by a continuation from the previous strength of the previous trend. So what that would look like, throughout history that's happened, what that would look like, right, is a reversal here, okay, and then a continuation of what? The dominating strong trend. Okay, whether BTC goes much higher or not, couldn't tell you, because my plan will technically fizzle out at the 52,000. So with BTC, I won't be able to forecast now until we're here, right? So sometimes, you know, the future's too far away, at least in my methodology, to be certain with, yeah? It's like tennis. Before someone serves a tennis ball, it's very difficult to know where it's going, right? But as they serve and as they hit the tennis ball, you get an idea of where it's going, and the closer it comes to you, the more receptive you are to the accuracy of being able to hit it back at the right moment in time. I think investing and trading is the same thing. So a little bit of alpha there for you. So that's BTC covered, right? And it could absolutely go parabolic, but I'm not viewing that favorably right now, right? Of course, we also have fear and greed that is It's struggling to break the 70 line, and we have the RSI at a previously dangerous level. I'm not going to plot that again. I've lost that. But usually when we're at this level on the weekly chart, which is the 80.92 and above, we get rejections. Yeah, we have rejections, and the rejections have led to a severity in price downtrend. They're not usually just small kind of rejections. That labeled with all the profit taking in the market, we're going to go over the contextual factors later, but to go over the bragging about profit, the people that haven't taken money off the board, I am not looking at this favorably. I cannot. My methodology is principles over paradigms. The principles are screaming to me, hey, chill out, right? Chill out. It's going to be waiting season soon. It's going to be waiting season soon. If you want to know what I've been doing, leading into the January the 1st, just previously before going, I had taken profit on quite a few other positions. Now, I have still some positions running, stuff like Doge and Rose, but quite a bit of profit has been locked in by me, right? Quite a bit of profit has been locked in by me, enough where, if it dips, maybe it'll sting. However, I have more than enough cash to buy a deep flush. And this is what we're going to talk about now. So the next question is, well, sir, what kind of deep flush are we expecting? I think this can be reified simply. So let me turn on Total 3, because it's Total 3 that I am personally concerned with when buying or looking at altcoins. And we struggle to break this range. So we have a key level right here, right? Key level. There's two key levels, in fact, right? There's one here and there's one here, and we'll go over them both momentarily. Right, we have two key levels. What I think, is occurring is that this is just a retest, It's a weekly retest. And from here, it's likely we either range or move higher. I suspect that when BTC truly unfolds, so if you refer back to just what I said a minute ago, that I suspect BTC is going to range, even within the ETF volatility, we're going to get a lot of volatility, but I believe we're still going to be stuck in a range for a little bit, right? If that's the case, then I would expect BTC dominance to fall, and for Total 3 to take out this high whilst BTC is in the range. And at the very last edge of the BTC range, the whole thing will unfold and move into this low area, which is still to be tested, right? That's my general idea, using BTC as the god coin, because I always do. So the contextual matters are dictated from BTC, and how alt USDT is looking, how alt BTC is looking, and how BTC is looking gives me a kind of cross correlation to perhaps assume that. And again, I'll take it out of theory into practicality, as I always do at the end of the video. If not, then it's as simple as turning on the monthly chart and saying, okay, well, where is the key level on the monthly? And it's right here. Okay, so that's the secondary level, right? So if we fail this area, then, the buying area, you want to start at 400 and 379. If, like me, you believe we're still to go a little bit higher, I think that is warranted. On the more bearish side of that same scenario, it could be that we just get a raid retest and then we continue down, right? Depending on how BTC is performing against BTC pairs. So this is what requires a little bit of time, right? We won't be able to know which one formulates unless we have a few weeks, right? And this week is going to be very important in general, right? The close is going to be very, very, very important. These next 2 weeks are going to be the most important 2 weeks in the entire trend. I don't need to tell you that. So what that means then for me is something I'll translate to you in just a moment, right? Just a moment. We're going to look at BTC dominance. It's in the middle of nowhere, but it's pinged off a monthly support level. As I did state to you, that's where we came for. So that was my exact scenario in the previous video that I thought we were going to move into there. Now we're in the gray area. It's very difficult to tell you. Right? It's very difficult to tell you. However, I would assume that we're going to, at minimum, range here or fall lower. If the ETF is approved, I think people will sell on the pump. If it's not approved, I think people will sell anyway, right? And I think dominance as a result will go down. Now, how do I factor this into altcoins, right? Or why do I think we either range or go down? Well, it's because of the cross correlation, but let me put this more simply. So let's turn on some of the high liquidity altcoins, such as Rose. So this is a reflectivity or a reflective chart of total 3 that I just shared with you. We have a move into a key level after an aggressive waterfall candle. This is the inverted chart, right? So we had a massive smash through that level, which is tough to believe it's a deviation, right? Because of how it moves through. Of course, we're momentarily pausing, but we've retested that, right? We also have a key monthly level. And monthly levels are not ones that people often look at. So remember in the previous chart, I highlighted both of them, or I'm doing it again, okay? So for me, right now, the entire market is retesting a key level after an aggressive move up, or obviously down on the inverted chart. If you go onto the daily chart, massive wick, price consolidating into the wick. I suspect at minimum we get a retest of this, and at maximum we raid the low before continuing up, right? If that doesn't occur and everything just starts to dump, I think we move through this and we move through into the monthly level. Okay, so be prepared, right? So be prepared for a 20 to 30% shock on altcoins, even though they're at a significant discount or have been significantly discounted recently, all right? So that's practically what you have to factor in if you're using the same technique as me, which is buying panic, allocating slowly into key levels and riding it out, right? I'm not doing anything complicated so far this cycle. I'm barely trading, right? I am barely trading. That's what I'm doing. I'm injecting capital slowly and I'm removing capital slowly and doing that with the trend, yeah? In a professional manner, not like, oh, I'm just dollar cost averaging. And no, I'm doing it in a professional manner. Okay, I'm reading my risk at all times. I have used a slight amount of leverage in order to boost position sizes. And in general, this is what I'm doing. So, I've taken profit on quite a few coins right here, and I still have some holding. If we end up pinging back down, yeah, I'll remove quite a bit more from the positions I have, and partials from long-term holds too, right? Very long-term holds. I've removed, for example, some on Illuvium already. The majority of coins I'm holding are free coins, so my risk is very low in general compared to what I started with, or perhaps what we started with last year or the year before last, yeah, in November. So I'm adding a small amount, right, in this area, and that will be shaved off if these kind of weekly supports are hinting at a failure, or I get the short-term signal that it's not going to work, right? If those are stopped out, I will wait for this area to get taken. If that continues up, the next place I'll re-inject is here, or if we were to raid a high like this and then move back down, well, I'll just re-inject the position that I had before. Yeah, just assume that it's cost me 10 or 20,000 to do that, right? It's because sometimes you can't be perfect, and this is something that plagues me and plagues many traders, that we can sometimes get amnesia thinking that we must be perfect, yeah? Especially when we've been through a trend where it's been easy to be right. That doesn't last forever. It's also impermanent, as most things are in life. So keep that in mind too, is that just because you've been right doesn't mean that you're not going to go through a period of difficulty at some point, right? That's just the nature of things. And the best way to prevent that is to really understand when status quo is switching. And I believe that is now, yeah? I saw some other guys saying the same thing that I respect, and it's generally what I believe. So let me look at some altcoins before we wrap up this video with a bit of wisdom, because I don't think there's anything more that I need to share here. But, let's get my list up right now. So I'll talk about altcoins and wrap it up with a contextual piece of alpha for you that I sent to Falcon before, of course, going on retreat. And I sent it to him as a way for us to both have clarity on whether it was the right time to take profit or not. So I'll show you that in a minute. A few charts I want to go through. A few of the best charts to buy in my opinion. Well, number one is RNDR. Sorry about this garbage Telegram announcement on the top of my page, right? So RNDR, top one to buy, right? If we get a move into this area, so it's what, a 25% move? Well, there you go, okay? 25, 26% move, great place to add. Most people don't look at monthly charts, etc. What this will look like on a daily chart is it will look like panic to you, yeah? Which is exactly the reason why I say this. So, you know, a move into that key area, people will think this whole thing is over. You understand? If that happens in the next 3-4 days, well, great. Well, great, I'll be buying, you know, and I'll be selling the retest and selling the new high. You know, that's my plan. Same thing that happens with Filecoin. So this was a rallier before the big dump we had. Yeah, it's broken out of a monthly downtrend, at least in my opinion, because we have a candle close above this area. It's retesting that breakout. It's a good one also to look at being close to a key level. Could go a little bit lower, but that's the game that we play. Same with Doge. So if you look at Doge on the inverted, you know, what's happening? It's at a key level, right? So on these altcoins, I'm expecting at worst another 15%, which for us is at best. At semi-worst, some ranging, and at best for BTC to range and then for them to move back to the highs, so a little bit more can be offloaded. Because many people, however, have not taken profit, I wouldn't be surprised if, for example, going back to Rose, so let's put on the Rose inverted chart, I wouldn't be at all surprised if we had a move like this, because there are so many people with inventory waiting to panic. And if you know anything about liquidity, you'll understand what I'm talking about. There are many people that haven't sold that will not sell because they perhaps might not get their exit, but they might turn into forced sellers. Individuals that are, for example, in from here, that believe the dip is too severe, like it is in every bull market, by the way. Okay, like it is in every bull market. They'll be convinced by some short-term news and part with a bag that they no longer want because they've been brainwashed on not respecting the value it has. You know, news outlets have pushed their voodoo as they always do, and which is a black art or dark art that people really don't seem to understand. But this is all I want to share with you, right? So within this video, I've shared some key moments with you. I contextually looked at BTC dominance total 3, specific altcoins, and it was a lesson in how to think of the market in terms of 1, key levels, 2, simplicity, 3, inversion therapy on news, 4, look at what other players are doing, 5, factor in ranges and historical patterns that there's no need to assume it's different this time. 6, total 3, 7, cross correlation, which is a lot of the stuff we actually teach in the tier 7 course, right? Chronologically from the start. So I hope that was helpful for you. I'm just going to conclude this video with the contextual matters that I sent to Falcon. And this is how you should think at all times, in my opinion. It's not financial advice, but absolutely. And I think Falcon's response to this was that, he was so happy to be sent this, yeah? He said, LMAO, I love you. So easy to get it when you talk like this. He said to me, put a tweet out like this in 10 days or so. And I actually didn't because I was in meditation. But these are the contextual factors that I saw and I have been presenting to you before I left to go meditate. Okay? Listen to this. Dominance falling. ETH BTC about to run. New year approaching. Euphoria everywhere. Alright? Solana, shitcoins pumping. People aping at Link USD resistance levels, which was something that kicked off the entire trend, which is suffering from a swing failure pattern right now. BTC at yearly open. Okay? January reversal. Flip pending. Big sell the news announcement coming. Tons of UP and L in the system. Still the same players. Cannibalism, basically. Becca is euphoric. Sorry, bro, I love you, but you're very bearish at the bottom, so it happens, right? We can all use each other as indicators at our worst moments. So bears flipped bullish. USD dominance almost at target. BC close to its pump target at a technical. resistance level. Total 3 approaching resistance. Mages starting to run, which are basically dinosaur coins. Doge almost at target. Influencers bragging, all-time high again. F&G almost extreme greed / key level. Yearly close has made people short-term bullish. Stupid targets on BTC emerging, Inge, and many others looking to break short-term steam. Reasons to be bullish, right? Reasons to be bullish. ETF announcement, hope and past cycles, right? So this is how absurd, right, and how much clarity that can be given to you when you learn to think in terms of principles over paradigms, which is the whole point about Tier 7. It's our motto, right? It's our slogan, and this is how I designed the entire course, to give you the excellence to be able to be simple moving through principles, right? And if you look at this is something that I have said to you is called the box comparison method, right? Because the brain is something that suffers from perceptual blindness. It likes to hold on, it likes to protect us. It is not trained to do this craft and can very easily be confused with recency bias and hope, and can forget about its plan in the heat of battle. When you look at it like this, it concludes it simply and clearly for you and allows you to let go. Thank you for tuning in today, guys. Have a lovely start to the new year. There is a lot coming for Tier 7 in Q1 towards Q2. And we had a very successful year last year, and I hope that many of you have taken profit based on perhaps my non-financial guidance, non-professional. I don't have an investment license around the world, but I hope that it was useful to you, because we absolutely nailed the bottom. Now we've nailed it in quite a few cycles, and we've made quite a few of us a significant amount of money last year. So try not to give it away. Perfection is not always the truth. Yeah, remember that. So if you give 10-15% away, you're still done very well. All right, guys, thank you for tuning in today. Have a lovely day. Peace.